and Rory will get back to you to answer any of those questions. All right, this is just a graphic representation. It's called the SPY Super System. It's a piece of software that I run on Thinkorswim. I don't trade on Thinkorswim, but I run the software on Thinkorswim, and it tracks institutional money flow. And this is really important because, as you multiple times you tell you, we're going to talk about high probability trade setups and what's some of the main things that you need to get into high probability trades and find high probability trades. Being in there when the institutions are in there is probably the number one thing. All right, and this is what the alert looks like on the phone. You get this these SMS text alerts. I'm on it as well, so I can determine how much time it's taking for the alerts to get out. They're very, very quick right now. The alerts I put out this week, I received them on my phone in about 5 seconds, so that was pretty good. And again, so we'll move with this alert service and what you get with the alerts and how to trade them. All right, now before I get into the actual details of the SPY Super System software, I want to talk about something that's really very important. This is really critical to understand, and this goes right back to why it's important to know if institutions are in a trade or not. This is a graphic representation of traders. These little marbles are retail traders such as myself and likely everybody else here. We're retail traders, and it's important to understand that you've got retail traders and then you've got institutions, all right, big institutions. When retail traders are mostly in the market, in other words, there isn't a lot of consensus with the institutions as far as pushing the market up, pushing the market down, pushing a stock up, or pushing a stock down. The institutions are basically just kind of neutral. Some are buying, some are selling. When that's occurring, it's just retail traders that are trying to push the market. We can't do it. Retail traders do nothing but cause chaos and chop. And you basically are just trading against other retail traders without any kind of institutional involvement in the market. You're gonna get a lot of chop and a lot of chaos. I'm sure if you've traded, you've probably noticed these kind of conditions. Now, for us as retail traders, when this is the situation, we don't want to be trading. We basically just want to be sitting back and watching. Now, once the institutions decide they want to get into a trade, whether a stock or an ETF or a whole index, this is what we want to know. Now, so you understand what makes up the institutions. I think everybody knows the big investment banks are part of the institutions. There's Goldman Sachs and JP Morgan, Morgan Stanley, the list goes on. These are institutions, and they make up a lot of the institutional trades, but not all of it. And it's important to understand that they have all these investment banks they've got trading desks because they actually have humans doing trades. But for the most part, about 80% of their trades, 85% of their trades are coming from algos or computer programs. They call them algos or algorithms. They all have multiple algorithms that they run every day, all day long, that are looking for specific setups in the market, for specific news. They have algorithms for lots and lots of different conditions. And when they find those conditions, and they can come in and trade heavily very, very quickly. So that's part of your institutions. Now, a lot of folks ignore things like pension funds. Pension funds are a huge portion of these because they have billions and billions of dollars to trade and invest. And so do hedge funds. Hedge funds are some of the biggest institutions that are out there because they have, again, more billions and billions of dollars. And the last one would be mutual funds, such as T. Rowe Price, Vanguard, et cetera. More and more billions of dollars. That's what makes up institutions, and that's what we're identifying with the SPY Super System as to when there's an inordinate amount of institutions pushing a trade one way or the other. We need to know that. And just as a kind of an aside, this week, everybody, I suppose if you watch the market, you saw what happened on Thursday and Friday. Dow Jones dropped 1,700 points on Thursday and 2,200 points on Friday. These are huge drops in the market. Interestingly enough to know, as far as the hedge funds are concerned, on Thursday, the hedge funds had their biggest outflow of capital in one day since 2010. Massive amounts of money coming out of hedge funds. So there are people going to cash because they're scared. I mean, that's what's happening right now. They're scared. They don't know what's going to happen here. Markets has plunged, and So what happens with fear is a lot of people take the cash and see what happens. So those are what drive the market. And our job is to try to identify when the institutions are buying or selling in mass. That's the whole point. Okay. In the room and on the alert surveys, I have a couple of simple rules that we trade by. First thing is we trade the best and skip the rest. So we're just looking for the very best trades that we can find, and skip all the rest. And this is probably more important than trading the best. Skipping the rest is putting traders in a position where they can not trade if we shouldn't be trading. And this is probably the hardest thing for traders to do because everybody wants to be in trades. But it's really important to skip the rest, which means a trade that you don't take, that you may have wanted to take, which would have ended up being a loser, is just as good as a trade you took that made you a winner. All right, that's money in your pocket, just the same as this is money in your pocket. So this is important, and I stress this because one of the biggest problems that most retail traders have is over trading. They trade too much. They trade too much. They take too many trades, and they get bored, and they want to be in trades, and they basically have their money just chipped away little by little by little after maybe making some money in the morning. So trade the best, skip the rest. And this kind of leads to that. Our objective is not to make trades. So in the room, our objective is not to make trades. Our objective is to make money. The whole point of trading is to make money. All right, it's not to make trades. It's not to be right. It's to make money. It's as simple as that. And basically, if you can keep focused on that, then you'll maybe avoid a lot of unnecessary trades that we don't want to take. I don't take a lot of trades in the room, honestly. As you'll see, we don't take an awful lot of trades. Some days we don't take any trades. Someday we'll take a few intraday trades, but no swing trades. This market has been absolutely brutal for anybody trying to swing trade. A lot of gap ups, a lot of gap downs, people getting trapped in trades all the time. So it's better not to be taking very many swing trades, which we haven't done. And I'll show you what we did this week. We only had 4 trades on. We took profits on all 4 of them while the market was collapsing. I mean, really collapsing. Okay, so maintaining discipline is important. And when I say maintaining discipline, once you have the SPY super system or you're in the SPY super system options room, maintaining discipline means stick to the strategies that we know work. The strategies that we use in the room have 85% win rates or higher. So we stick to those. We don't try to wander off and watch what's going on in some social media feed telling you that you should buy Netflix because it's going to go up 20% today from some stock trader who's never made a dime in their life. You want to stick with the discipline of what we know works, and that's what we teach in the room, and that's what we will be only recommending. And remaining patient. And again, this goes right back to over trading. Please don't overtrade. Just wait for your setups to come to you. And it takes a lot of patience to be a successful trader. It really does. But if you're patient and you wait for trades to come to you, not only are you going to have more winning trades, but you're going to have a lot less stress, because when you're chasing trades with FOMO, chasing a stock that's moving up early in the morning, and you can't take it anymore, you watch it keep going up, you think you're losing all this money, and you jump in and you get in and it's right near the top and it reverses on you, you suffer a lot of stress. It's very emotional. So we try not to do emotional trading. Keeping as much emotion out of the trades as possible is very, very helpful. Okay. Now, as a profitable trader, we need an edge, and we need an edge over other retail traders. Remember, we're not trading against institutions. We're just trying to trade with the institutions and pick up their breadcrumbs. We need to have edge over other retail traders. All right, we're just trading against them. If we've got better tools than they do, we've got better knowledge that they do. If we have just better information than they do, then we're going to beat them. We're going to take their money. So our edges are the SPY super system software, which identifies to us whether institutions are in the trade or not, whether they're bullish, bearish, or just not even in the trade. We also trade relative strength and relative weakness. This is something that a lot of retail traders don't seem to understand, or they don't seem to, they ignore. Relative strength means, and it's not RSI, relative strength means how is my stock that I'm looking to trade, how is it performing right now on a 5-minute chart relative to the S&P 500 or the triple Qs or the NASDAQ. And if you've got a stock that's moving up, while the SPY is moving sideways or down, you've got a stock with relative strength. If you take stocks with relative strength to the upside, and relative weakness to the downside, it's going to increase your edge, because if the market turns around and goes against you, those stocks are not going to go against you as quickly because they get relative strength or relative weakness to start with. A very critical edge right here. Very few retail traders even understand this, or if they do, they don't use it. And obviously, most retail traders don't know whether institutions are in the trade or not. And then we trade with the market trend if there is a market trend. That's the third thing. And then the last one is to buy near support and sell near resistance, which means if you're going to get into a trade, don't chase it when it's way, way away from support or resistance. Wait for it to come back and then bounce. And this is how Fibonacci candlesticks are going to help you in this method. I'll show you that. So buy near support, sell near resistance. This means your downside risk is minimized and your upside profit is maximized. All right. Now, this compass system, which is actually the kind of the platform of the SPY super system, it's the software that runs on Thinkorswim. But we call it now. I call it the SPY super system because it includes the strategies, it includes the scans, things like that. But it identifies the highest probability setups while sidestepping setups that look good but will fail more often than they succeed. All right, trade the best, skip the rest. It does this by identifying when the institutions are driving the move and when they're not. And it analyzes a very complex trading area. You can't get this information very easily. It takes a computer systems to analyze this, and it displays the results though in easily identifiable visual format. So anybody who's looking at the SPY super system software, which I'll show you here soon, is going to be able to tell very quickly whether a stock is whether the institutions are in a stock or they're not, and whether it's bullish or bearish. So again, this visual element makes it possible even for new traders to find high probability trades. And that's the SPY super system, which if you want to, you can purchase. I own it, of course. I display it in the room every day so people can see what it looks like. But most traders in the room have their own copy so that they can trade themselves. You know, they can look for other trades themselves as opposed to just watching the chart that I've got up. Okay, now getting an edge over other retail traders. What are individual traders' edges? We're only taking trades that are being driven by institutions. All right, you know, this is very, very critical. And if you don't have the right information, you're guessing. I mean, you just can't say this because you're getting a big volume pump that institutions are driving. You don't know that. All right, we have to look at other things. We trade stocks that have relative strength or relative weakness to the SPYs or the Qs, and we trade in the direction of the overall market trend. These are the keys to how we're getting an edge over other retail traders. So how does that give us an edge? Well, our trades will be supported by institutional buying and selling. Again, we come right back to the institutions again. The stocks will be outperforming the index, the SPY, because we're doing relative strength, relative weakness, and they're going to be moving in the direction of the overall market. If you do these three things, you're going to be heads and shoulders above 95% of the retail traders out there. I just kind of like to show the thought process that I go through. This is, I call it a high probability trade setup funnel. This is just a virtual funnel. This is the thought process I go through when I'm looking to take a stock and see if it's something I want to trade. And this is something that a lot of retail traders ignore. For trades you're going to take, which are going to be, and I'm not talking about scalping here. We're just trading 5-minute candles for two or three candles. I'm talking about stocks that you'd like to be able to stay in for a few hours, or overnight, or a few weeks. The first thing you have to look at, the first thing you should be looking at is a daily chart. Don't take a swing type trade or even a longer term day trade unless you're trading in the same direction as the daily chart. So if you're taking a trade and you think it looks good on the 5-minute chart and you want to trade it long and you've got a bearish daily chart, you put yourself in a really big hole here, because if the stock goes against you, if you're going long and it starts to head back, you can't stick with it because you don't have a daily chart to lean on, and you certainly can't take it overnight because the stock is bearish. So this is something that most retail traders, and this happens all the time. Somebody will show me a trade they want to take. They show me the 5-minute chart, how good it looks, and I look at it. I bring the daily chart up, and I said, if you looked at the daily chart, it looks terrible. It's bearish, or we're right against a moving average for resistance. You don't want to be taking that. So please try to learn to use a daily chart initially when you're going to get into a trade. Again, we want to trade with the trends, both the stock trend and the market trend if we can. Sometimes there's no trend, so that sometimes doesn't come into play. The SPY super system must align. Again, we've got to see the SPY super system telling us that the institutions are in the trade bullishly or bearishly, and I'll be showing you that in just a minute. And then we look for relative strength and relative weakness, as I said, and then we want to try to enter near support, near resistance. Stock that meets these criteria and drops out the bottom becomes a potential trade. Then we do some further analysis on it. How close is it to resistance or support? What do the options look like on it? Do we have a good enough risk-reward ratio to trade? Those kind of things. But anything that drops out of here becomes a potential trade. And again, this is just that high probability trade setup written out here. Again, stocks to be traded should have a daily and 5-minute chart aligned. I keep trying to emphasize this, and the SPY super system indicators must align in the direction of the trade. These two things right here are a must. You've got to have these unless you're just scalping. These are very, very critical. One thing I will mention is on a 5-minute chart, if you're in a trade that looks good, it's a good bearish, bullish daily chart, and you want to trade, you want to get into it off a 5-minute chart, make sure if you're going to go long that the price above the VWAP, the volume weighted average price, make sure the stock price is above that for longs and below it for shorts. And I'll show you the VWAP. This is very critical. This is something that all the institutions use as a key level on their trading. It's where most of their buys and sells take place. Have patience. I keep emphasizing that. You've got to have patience. Okay, now in the room and on the alert service, these are the strategies that we use. We use options. I sometimes take straight a stock if the options aren't good enough. But we do straight calls and puts, and we do straddles and strangles. Okay, and if you're not familiar with those, I have videos and all those. It's basically just a strategy. This is a non-directional. Straight calls, straight puts are directional. You need the stock to trade. Either if you get calls, you expect it to go up. You need it to go up. If you have puts, you expect it to go down. You want it to go down. With straddles and strangles, you don't care which way it goes. You just want it to move with a big move one way or the other. Those are straddles and strangles. We use debit spreads using weekly options expiration. You don't have to understand what each of these strategies is. I explain them in the room. I have a video on them, but I just want you to be aware of what the trades we take, how they're going to be constructed. We do things called time spreads. This is just a calendar spread. Basically, it's done over earnings. It's done to capture in volatility crush. This is a non-directional trade as well. And I only do it over earnings and just to capture volatility crush. I don't care which way the stock goes. And another one we do when we have this weekly ATM strategy. This is done when the market is neutral to bullish, which it is definitely not right now. So I'm not doing any of these right now. But when we do have a neutral to bullish market, this is a strategy where we sell puts against the stock every week to bring in premium, and we have a longer term dated put out in further in time to protect ourselves. It's called the weekly ATM strategy. Then we also do credit spreads to capture premium over a few weeks. We do this, not a lot, but we do it occasionally. A lot of these things now, it's important to understand we have all these different strategies because we need to have strategies that we can apply to what the market is doing right now. The market comes first in everything that we have to do. Before we make any trades, we've got to have a good indication of whether the market's bullish, bearish, or choppy. And you've got to structure your trades to match that. You've got to take bullish trades when the market's bullish, bearish if it's bearish, and when you have a choppy market, you're going to take smaller trades, you're going to take less risk, and you're going to take specific type trades that meet the trading conditions. All right, and now we do have one thing here called the SPY super system. Now this is something that we don't do any alerts on. I don't post them in the room. These are quick trades off of a 5-minute chart for the SPY, the Qs, or the IWM, or the futures. You can use it on ES and NQ. And we call it the SPY super system. We're basically looking for institutions that are in a trade on a 5-minute basis, and they're pushing the momentum up or pushing momentum down. We'll join them at specific levels. I have a very strict criteria that we use to get into these. These are very, 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 very profitable, but you manage these yourself. You're only going to have one of these on at a time. You have to manage them yourself. So this is only for people that can be watching the market when they're trading these. Now you may not be in them for more than 15 to 20 minutes, but it's imperative that you're able to watch these, unless you put like a stop order in on it and a profit order in on it. But when I do them, I watch them and I manage them myself. Okay, the alert service also is if you join the room, you'll get the alert service so that you can get the trades when you're not in the room or when you're on the road or at work. It's designed for day trades and short-term swing trades. It's not an investment service. We're looking for stocks that we're going to be in for maybe most of the day, or maybe overnight, or perhaps like 2 or 3 weeks. But that's what this alert service is for. Again, it's designed for traders who can't watch the market all day. You're going to get real-time alerts on the highest probability trade setups. So we'll take trades in the room that are going to be fairly quick trades that we won't alert on, because we're only going to alert on trades where the folks who get the alerts have time to react to it and to get into it and get out of it. So that limits some of the trades we send in alerts. But if you're in the room, you're going to get the alerts anyway. So if you're not there, you'll still get alerted on the highest probability trades that we take. And the highest probability trades, how we find these, we're looking for institutional involvement. I keep saying this is critical. We're looking for institutional involvement. We're looking for market internals. Market internals being whether the market is bullish or bearish. On internals, I use a cumulative volume index. Basically, the total number of volume on stocks going up minus the total number of volume on stocks going down. If it's plus, the market's bullish. If it's negative, the market's bearish. If it's relatively neutral, there's no bias. And then we do technical analysis. So that's how we get the stocks that we take in the room and the ones we send out in alerts. This is just a quick equity curve. I really have to take time to do another one. This was the alert service from March of 23 to May of 24. This thing is almost a year old now. But the graphics on the new one would look just about exactly the same. And this is if you put $2,000 into each trade. I have to use a baseline. Obviously, nobody puts $2,000 into each trade necessarily. Some will use less, some will use more, some will vary it. But this at least shows you what the win rate's doing for our equity curve. All right, now we're going to talk about Heikin-Ashi candles here. Before we get into the SPY super system, because I know some folks came here and they want to learn about Heikin-Ashi candles. So we're going to cover that now, and then we'll get into the trading platform, the results, etc., and how we trade them. But Heikin-Ashi candles, and I call this the compass options, but this is SPY super system room. Trading Heikin-Ashi candles with a SPY super system. Now, if you don't know what Heikin-Ashi candles are, they're different from regular candlesticks in that it takes 2 5-minute, for example, for a 5-minute chart, it takes 2 5-minute candlesticks to create a Heikin-Ashi candle. And there's a specific calculation that you go through to come up with the way these candles look. But the key thing to understand about Heikin-Ashi candles, and this is the most important thing, bearish Heikin-Ashi candles will have flat tops. They won't have any wicks on them, right? They'll have flat tops. These are bearish Heikin-Ashi candles. This is a British pound, Japanese yen. Doesn't make any difference. This could be Netflix. This could be Microsoft. This could be anything. Could be the ES. Could be the S&P 500. But flat tops are bearish, right? No upper shadow. Flat top, bearish, 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 bearish. Now you notice that each Heikin-Ashi candle, the beginning of it will start in the middle of the previous candle. They'll always look like that. All right. So this is a bearish Heikin-Ashi candlestick. These are bullish Heikin-Ashi candlesticks, flat bottoms. Right. So if you don't learn anything else, flat tops on Heikin-Ashi candles are bearish, flat bottoms are bullish. But the main reason we use Heikin-Ashi candles, well, there's several reasons. You can see the trend easier, etc. But the reason I use them in the room for more than any other reason is because I'm looking to try to find a reversal in trend that I can confirm. All right. If I'm looking for a stock to bearish, and let's say it's a bullish day on the stock, but it's coming down hard, and I want to get into the stock, but I want to get into it long. Once it confirms that it's reversed back into the trend, then I'm looking for Heikin-Ashi candles. Now, as this comes down with these flat tops, we start getting wicks and tails, wicks and tails. This is indecision, indecision, indecision. All right, and we get a little bit of a bullish candle here. But one thing I will mention, that when you're reversing a trend, the size of the candles, the size of the Heikin-Ashi candles that are indicating a reversal need to be big. as big as the ones coming down. So when you get a situation like this, we've got large red candles coming down, and then you get smaller green candles moving up. That's not something I'm going to jump into because the trend was too strong. So now it comes up and it moves over, wicks and tails, wicks and tails. Here is a big Fibonacci reversal candle right here. This is where I would enter to get long, right there. Okay, this is a bullish Fibonacci reversal. Notice wicks and tails, flat top, wicks and tails, flat bottom. That's a bullish Fibonacci reversal candle right there. No lower shadow, and then you start stacking these bullish Fibonacci candles, and I stay in it until I get a reversal right there. That's what I'm looking for. This is what we're looking for on the charts, on the 5-minute chart or on the daily chart, but specifically on the 5-minute chart. This is what I'm looking for to enter a trade, a Fibonacci reversal candle, to get back into the trend that was already created earlier. All right, I wouldn't be doing this if the stock was red for the day. I'm only going to take this on stocks that are green for the day. I want to take them long, all right, which means I wouldn't want to take them short. So hopefully that's clear. This is what we're looking for: flat bottom, flat tops, bearish, flat bottoms, bullish. Okay. Now this is something I wrote a long time ago and read it, but the key thing here is Fibonacci candles. It means average Japanese, average bar in Japanese. It's basically 2 candles making up 1 candle. And it does smooth out the price action, so identifying trends and reversals is clearer. This is really important, and eliminates a lot of noise. And when it eliminates a lot of noise, it makes it easier to stay in a trade where you might get shaken out if you were watching the regular 5-minute candles. And it does allow for improved profits. And again, bullish Fibonacci candles have flat bottoms. Bearish Fibonacci candles have flat tops. We just discussed this. Bullish trends will have flat bottom Fibonacci candles, one right after another, and bearish ones will have flat top candles, one right after another coming down. Okay. And again, a reversal in a bullish trend. Now this is what we're talking about. If the Fibonacci candles are showing bullishness, flat bottoms, it'll have a flat bottom Fibonacci candle followed by smaller doji Fibonacci candles having both wicks and tails, followed by a flat topped Fibonacci candle. That would be a reversal from bullish to bearish. Okay, and when you get the video copy of this, you can read through the rest of it, but I don't want to take too long for doing this. I want you just to understand what's critical about using Fibonacci candles. Okay, again, once you have a valid Fibonacci reversal, the first thing that needs to be true is the Fibonacci candle height has to be at least as large, preferably larger, than the prior candles that occurred to the reversal, which is what I just pointed out just a bit ago, all right? You don't want to be entering a reversal trade on a small Fibonacci reversal candle after several much larger candles occurred prior, because you're basically, that's not a good confirmation of the reversal taking place. It could end up just being some more chop. Okay, and again, this just says what you should be doing as far as trading relative strength. I look for Bollinger Band's expansion, which is looking for a breakout of compression. And again, I have to have the SPY super system tell me that the institutions are in the trade. Okay, but the Fibonacci reversal candles will help you when you're trading, when you're looking to get into a trade more than anything else. If you want to get into a trade on a breakthrough compression, if you got a Fibonacci candle that's showing a breakthrough compression, then that gives you a much better probability of being profitable on the trade. All right, so again, this is just some information. Fibonacci candlesticks evolve from Japanese candlesticks. Again, they combine open close data from the previous period with open high low close data from the current period. That's how they created. All right, they minimize noise, and basically it does help identify trends and reversals much more easily. All right. Again, the advantages, it's talking about long haul. You don't have to pay any attention to this, but basically what we're talking about is the absence of lower shadows underscores the strength of the buying pressure. Yeah, that's the flat bottoms like that. All right. Understanding trends with the Fibonacci. Here's a kind of what we just talked about. You can see here that where flat bottom is an uptrend, signals a strong visual of current trend support. Now you can see the Fibonacci here. See, we're coming down to flat tops, coming down. Then we get chop, 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 chop. A reversal, but not big enough. Candles not big enough. Then chop, chop, chop. Now we get reversals, and we're starting to stack green candles with flat bottoms. That's the reversal into the trend right there that you want to be in. right? If you're in a nice trend like that, you don't, as long as you haven't hit your stop because you haven't hit your level that you use as a entry level, then you're in good shape. Like if you come in right here, this would be your stop down here. You're okay with that, and you can stay in this trade. And you notice how you get these stacked candles. And Heikin-Ashi candles, once they created, most of the time you're going to get multiple ones, one right after the other. And here's where you would be exiting this. You notice that we've got moves up here, and then we're getting a flat topped Heikin-Ashi candle here to the downside. Not something you'd want to short, but it's something you want to take profits at. All right, and again, tips. Make sure you examine nearby support or resistance levels impacting potential gains. This is always true. When you get into a trade, you should be looking for where the next resistance level is or where the next support level is to see if you've got room for that trade to reach those levels and give you an adequate profit. If you're in a trade trying to go long, and if you look in the daily chart and the stock is 10 cents away from the 200-day moving average above it, then you don't want to take the trade. You don't have enough room. Align the trade with the current market trend if you can. Again, choose a stock with relative strength or weakness. This is really important. I do monitor Bollinger Bands, but I won't go into too much detail on that. Basically, what we're looking for, Bollinger Bands, when they expand, are indicating a breakout of compression. And after I enter the trade, I switch to standard candles, so that when I want to get out of the trade, once it reverses against me, I don't have to wait for 2 candles to get that confirmation. I can get out quickly and take profits. And that's especially if I'm in profits and I want to take profits pretty quickly. All right, so here's a recap of advantages of Heikin-Ashi candles. It smooths out price action, reducing noise. Very important, because noise in the market, when you're seeing candles that are jumping all over the place, it's very stressful. It creates emotional trading in you. When you're in a trade and you start to see, let's say you're in a nice bullish run, and you start getting choppy 5-minute candles that are going down, going up, going up, going down, you're going to get really nervous about the trade, and you may bail on it when you shouldn't be. It makes identifying trends much easier, as when we look at live charts, you'll see that. It improves identifying confirmations of trends or trend reversals, especially trend reversals. This is important. And again, it does help identify potential actions when the candle bodies shrink or the reversal occurs. All right. And this is just a graphic of Uber, but I just wanted to show these 2 Uber charts, one regular candles, one Heikin-Ashi candles. This is a regular candles on Uber. Doesn't matter when it was, it's a couple of years ago. But you can see this is the Uber chart right here, right? And notice the gap right here, all right? That's the Uber chart. Here's an Uber chart with Heikin-Ashi candles. You notice there's no gap because they say taking 2 candles units, but you see this reversal right here, right? Here's you see the bearishness, flat top, flat top, flat top, flat top, and then flat bottom. Heikin-Ashi reversal candle right there to the upside, and you stack them. There's another one, another one, another one, another one, another one. This is the kind of action you're looking for off the Heikin-Ashi candles to take profits. It flattens out and you get out. Just a note, the candle colors here. This is actually my TC2000 charting program. I use the compass system or the SPY super system to identify institutions, but I just want to show you this on TC2000 because I color my candles when the compression's breaking to the upside or to the downside. If it's breaking to the downside, I color them pink. These would be red candles. And when it's breaking to the upside, I color them blue. These would be bullish coming out of compression. Right, so there's Uber and there's Uber. Now I'm going to go to some live charts here. So I'm going to pull over my TC2000 so you can see that. And then I'll show you some of them in the SPY super system. But I'm just going to basically just take a look at a couple of trades from yesterday. This is live TC2000 from yesterday. It's live right now, but here's yesterday. Now this is Goodyear Tire and Rubber. Now, if you were looking at Goodyear Tire and Rubber, excuse me. And you know how terrible the market was yesterday. This is a Heikin-Ashi reversal, a big Heikin-Ashi reversal candle on GT. All right, but that's a regular candle on GT. If I look at the Heikin-Ashi candle, here's what it looks like. See this chop? We're getting a Heikin-Ashi reversal candle here. So this would become a buy. I wouldn't buy anything in this market, but this is set up as a buy. Now you notice when it did it over here, you see how it stacked 4 candles like that. And this was GT. There weren't very many bullish Heikin-Ashi reversals yesterday. Very few. BJ's was another one. It's a Heikin-Action reversal candle, and BJ's right here. We had a reversal deck here. It's moved up. This is actually a confirmation. We're already in an uptrend. This confirms the uptrend is continuing. All right, flat. We got a wick and a tail, but then we got a flat bottom. If we go back and look, you can go back over these charts and you can see how these Heikin-Action candles work. You can see the bearish reversal here and how nicely that picked up that down move, how nicely it moved to pick the up move here. So any stock that we look at, I can go back and look at Heikin-Action reversal candles, and I can see this is Apple. You see how this Heikin-Action picked up the reversal right here in the trend. See this uptrend? It picked up this downtrend. You see how nice the downtrend. Look at how long you could have stayed in that thing, right? And then it reversed back the other way. And here's the reversal here. Now the market the last couple of days, we know what it's been doing. This is what we've seen, Heikin-Action reversal in Apple. But you're certainly not likely going to chase a trade to the downside. But it does identify the Heikin-Action reversal candle right there on Apple. And I can basically take pretty much any stock and see if they've got Heikin-Action reversal candles or not. This is Match, had Heikin-Action reversal candle yesterday. But notice back here, back when the market was a little more tame, see this nice reversal here? See how it's stacked? Flat tops, flat tops, flat tops. So this is a bearish trend. So you can kind of ride these kind of trends. Right? So you can see how easy that is to see. If I go back to the regular candlesticks on this, you can see how choppier it is. So which is easier to follow, that or that? A lot easier. See how smooth this is right here? This will keep you in the trade, especially if you're using something like this white line, which is the 8 exponential moving average. So that's how we find these. That's what we look for. XP was another short right here. You can see the Heikin-Action reversal yesterday. Yesterday is a bad example because it's going to be, because of 2 down days in a row, we're going to have tons and tons of Heikin-Action reversal candles to the downside. But you notice how nice it was here to the upside. See the stacked candles, to the downside. So very, very nice. Merck has been a very good short lately. There it is here yesterday, but beautiful move here. So this is a daily chart. This is how we find these. Now these works on 5-minute charts the same way. If I switch to 5-minute and I go to regular hours, I'm going to see what Merck did yesterday. So if you're trading off a 5-minute chart and you see this reversal here, right about in the first thing in the morning, it's nice and bearish. Now, if you didn't get in, you look, what you're doing is you're looking for Heikin-Action reversal. We don't have them here. You see how little candles, wicks and tails. See that flat top right there? That would be an entry level for Merck short, because you can just follow it down now. That's what you're looking for. Right? That's how these things work. If we take a quick look at Tesla yesterday, how did Tesla look? Well, everything got clobbered in the morning, and you could have followed it down. Quite hard to jump in this early, but you wait to see if you get another opportunity later in the day. And here's one right here that you could have taken, but it didn't last very long. It was late in the afternoon. But that just kind of shows you on the 5-minute chart what you can look for. And if you switch over to daily, there's your daily chart on Tesla, which again is showing a Heikin-Action reversal to the downside, but in a very, very bearish market. And if we look at the SPY and the Qs, there's a SPY yesterday. And if we look at regular candles on the SPY, here's your SPY, S&P 500. This is the S&P 500. We've done a daily chart. Back here is when the Fed said they weren't going to be cutting right away again back in December. Looked like a big, huge drop. But if you notice the chop that we're getting here in this market, up and down, up and down. This is why it was so difficult to swing trade, because you get in long when it starts moving up, you get a gap down, you get wiped out. So this drop down here, right, crushed all the bulls. It chopped around here. Everybody got bearish here, and then you get inside of this bearish trend. You see these green candles? You've got bullish candles coming like every other day. So if you get short, you get closed out. If you get short, you get closed out. So it's very, very difficult. Swing trading, day trading, not so bad. But here's the market, and the market is right now has given up all the gains that it's had over the past year in 2 days. So that's my TC2000. All right, so that's what Heikin-Action candles look like. We've looked at some live ones now. If I switch over to the Compass super system, or the SPY super system, here's the SPY super system right here. This was Nike. This is one of the trades that we had, which I'm going to kind of go over. This is a daily chart, but let's look at a 5-minute chart. And we're going to talk about what all these things mean. But this is a SPY super system. These are the indicators that tell us what the institutions are doing right here. All right. And I'm going to cover each one of those. These are the three major ones. This is the most major: current time frame momentum, multi-time frame momentum, and trend. I'm going to go over each one of those and how we use them. But that's Nike, and you can see it here. If I switched over to Heikenhachi, that's Nike. If I switch over to Heikenhachi candles on the compass system, on the SPY super system, you can see the reversal right there to the downside. I don't think anybody would have been trading Nike long yesterday, but it actually popped up pretty nicely. This was when they just had a discussion that Vietnam was trying to make a deal on the tariffs. Boom, up it goes. So it's identifying all those kind of situations. All right. So let me get back to the presentation, just so I think we know a little bit about Heikenhachi candles and how to use them. Hope. Any questions anybody has on these so far? Okay, it seems like everybody's on board here. All right, so we're going to talk about the trading, the results we've had with the SPY super system in the trading room and on the alert service. I've got a lot of months worth of information. I'm not going to go over them all because it takes too long, but I'll show a representative sample of them. This is our results in 2023, trading the SPY super system. It putting $2,000 into each trade. And again, I have to use some sort of a baseline to use this to come up with a number. But if I put 2,000 each trade we took in the room, we made $60,000, a little over $60,000 in 2023. In 2024, so far, in 2024, we made about $55,000, down a little bit. And a lot of the profits, of course, are going to be dependent on what the market's doing. Get a trending market, you can make more money than if it's in a choppy market. So those are going to have an impact on that. All right, now, these are the trades we closed this week, and I want to just kind of point this out because if you watch the market, you saw what the market did this week, especially Thursday and Friday. I mean, it was a bloodbath, and we didn't have any positions on. We've been positioned very conservatively. We haven't had a lot of swing trades. We've only had a few. We haven't had very many longs at all. And when we come into this week, we only had 3 trades on here. We had AVGO, we had Nike, we had Sarepta, and we had NNE. NNE we put on the second, Sarepta on the first. But these two we had on when this week came on. All right, so this is AVGO, Broadcom. We entered on this for 75 cents a contract. We were doing a spread, I believe, on it, and we closed for $1.04. All right, so that was a 39% profit. 2,000 invested in that, produced $754 profit. And these are all the trades we closed this. We didn't have any other trades. This is it. We did this Nike. We entered Nike for $285 a contract, and we closed it for $9 after that big huge drop on Thursday morning. Now some of the contracts went out. We took profits on the previous day at like $385, but the ones that stayed in, and I stayed in with most of them, closed at $9 on Thursday. That's a 216% profit. This is very unusual for us to be making that kind of money on a trade. Most of our trades are going to run between 20 and 50% profits. Something like that is much more normal. But this is what we took. And this was our best trade of the year. And so this was a huge trade. I mean, it produced $4,300 on $2,000 investment. That's pretty substantial. And Sarepta, which we took on the first, we entered at 450. We took this short again, short. Entered at 450 a contract, closed for $8, 78% profit. 2,000 invested, produced $1,400. And NNE, we entered for $1.80 a contract, closed for $225. This was I believe a straddle, 25% profit. That's pretty common. 495 profit. So these are the only trades that we took. While the SPY was down 10%, the SPY was clobbered. It's down almost into bear market territory right now. So, if you were trading, we didn't have any longs on it. And this trading with the market is so critical. Knowing what the market is, what you think the market's likely to do. I try to position ourselves very conservatively in this kind of situation by not having a lot of swing trades on. If you had a lot of swing trades on, especially longs on Wednesday, and you come in Thursday morning, you're scrambling to try to bail out of those long trades that you had on. absolutely getting crushed. And we didn't have any on. So we just sat there and smiled and took our profits. The only problem we had was just when to get out of these things. You know, we could have got up Nike if you took it in all day. It went up to about 11.50. But you know, I'm perfectly happy to take the money on gaps. One of my criteria, or one of the sayings that I have in the room is gaps are gifts. When you get a gap in the direction of the trade that you're in, you're short and you get a gap down, take the gift, take the money. You know, at least take most of your position off, because gaps don't necessarily continue on down, and I consider them gifts. And gaps do two things for you. The market becomes volatile when you get a big gap up or a gap down. So the volatility that the market is creating is increasing the premium on the options that you've got. They jack up the price on the options because there's a lot of volatility, which means you're going to get an inordinately larger price on your option when you exit that trade. Okay, so that's why we had such a big booming trade in Nike and Sarepta. So again, SPY was down over 10%. These are our trades for the week. I mean, that's you'd be feeling, as again, in the room, we're pretty happy. The market's getting clobbered. You know, everybody, if they've got investments, are not happy about it. But for a trading standpoint, we're feeling pretty good. We had a really good week. Do I consider SPY gap down? Did I consider SPY gap down? Yeah, well, when SPY, I don't know exactly what you mean, Josh, by that. Do you consider SPY gap down? I mean, a gap down Thursday, a gap down Friday, big time gaps. I mean, if it opens below the previous day's close or above the previous day's close, those are gaps. Okay, so those are gaps. All right, so there's what we did this week, and again, I wanted to point that one out because this is current. This is, if you want to know what's happening right now, this is what we've been doing. All right, so this is from 2024. I'm just going to run quickly through some of the months last year, just so you can see. And the main reason I do this, am I in the SPY Friday short? I was, John. Yes. Josh, yes, I was in short on the SPY on Friday. I'm out of everything right now, except a few miscellaneous trades, but I'm out of anything major right now. I want to see what happens over the weekend, news-wise. A lot of volatility possible. You know, it's possible that they could roll back the tariffs, the market would shoot up, or they could push them further and then they could go down. So I don't really want to be involved in that. And one of the problems with taking trades over this weekend is because the market is so volatile that the cost of the options extremely expensive, extremely expensive. Am I not holding SPY over the weekend? I'm not, Josh. I'm not holding SPY puts over the weekend. I looked at them, and I actually looked at doing a straddle or a strangle or straight puts. The market makers have got the premiums jacked up so high that it's going to have to make a really big move to make any money on it. So that's why I didn't do it. Okay, so this was January. We had 20 wins and 2 losses, 90% win rate, 75.05, nice month. February, our best month last year, 24 and 2, 11.745. We don't get all big months like this all the time, you know. But the key thing here is to look at is how much are we making on these trades? And again, we have losers. That's very critical to understand. Nothing's 100%. You're always going to have losers. It's also important to understand that the percentages you're going to see on most of your trades are going to be in the 15 to 50% range. That's typically what we're going to get. This was a nice PayPal strangle here. We did take AMD 80%. That was pretty big, but most of them are going to fall in this range. And I mean, listen, we're not going to make 300-400% on trades. Like you may get webinars or emails where you can make 300, 400, 500% on a trade. Yeah, we made 200% on Nike, but that was a great trade. We were in a good position, but it was caused by that big huge gap down. You can't predict those. So this is more what we're looking for. We're just trying to stack win on top of win on top of win on top of win. Okay. And the alerted trades, by the way, had 20 wins and 2 losses, netted 63.30 on 2,000 per trade. All right, so this was May. I'm just putting some miscellaneous months in here to show you all the months up through here were all winners, but they varied, you know. But you can see the win rate stays 88, 81%. It's going to stay pretty nice. June, 86% win rate, 92% win rate in the alerted trades. We actually made more money in alerts in June than we did in the option room. But again, you don't see not an awful lot of trades. Only 12 and 4 in July. Only a 75% win rate. That's my lowest win rate to date. 12 wins, 4 losses, but still netted 3,300. Right, that's July. August, you can see the numbers here, 89, 89. September, this was our only losing month last year. Only had 13 trades in the room, 8 and 5. Very difficult to find anything good. Lost $1,786. The alerted trades, 8 wins, 4 losses, lost $295. All right, so we had a big loser here in John Deere. But this was a bad month. So I just want you to be aware that there's going to be losing months. All right, but but look in October, jump right back, 74.48 in the room, 6 of 60, 63 on the alert service, 17 and 3, 85% win rate, right back up again. So that's what you see with the results. And this is November, and I won't go through every single month, but you can see this is January, February, March. This is this year so far, and again, this has been a rough year. 15 and 3, 84% win rate, 31.35 in January. February 3,800, 16 and 2. March to date, we actually have closed it now, 20 and 4, but $7,800. That of course we had some good trades in there, but again 20 and wins, 20 and 4, 83% win rate, but it stays right in there between 80 and 90% every month. So this is where we are this year. You can see we're up decent money, about 14,000 on 2,000 put in. Now to quickly cover the alerts. And just so you can see what it's going to look like. We trade the best, skip the rest, obviously. But this is what the alerts look like. Again, you're going to skip the stock symbol, the strike price, the expiration date, and the price to pay for the option. All right. So this was the alert that went out when I first put it on 328. You would get an alert that says NKE Nike buy the April 11th 67 puts for 285. That's the alert you would have received. All right, then I had a sell order in for 385, and then I changed it to 9 when we had that big gap down. Sell order for 9. And this is where we sold them for $9 on April 3rd. I think I actually sold it, put it in there at 11.50, and then sent another alert out to move it to 9 when they were moving up a little bit. So that's what the alert will look like, and you'll get an alert when we enter the trade. You'll get at least one alert when we exit the trade, and if there's any adjustments to the selling price. If we're going to take a loss or we're going to increase the price, you'll get alerts for that. I basically every morning before the market opens, I take a look at what the stocks are in, what they're doing, and I may adjust with an alert before the market opens to adjust the sell price. All right. And again, I do emphasize when you put the sell order in, like this $9, you want to put it in as good till canceled. So if it doesn't close out that day, and the market opens the next morning, you don't have to be there to re-put it in again. It'll be good till canceled, so you change it yourself. All right. Now the question is, how do we achieve these kind of stunning results? And I mean, there's a few things that go into this, but the biggest thing is we identify when institutions are driving a trade, and that's where the SPY super system comes into play. All right. And we only take trades when both of these are in a favor. That's the institutions, and if the market internals are bullish and bearish. I actually take trades when the institutions are in the trade if the internals are neutral. I don't necessarily have to have the internals in my favor, but I can't have them against me. Basically, that just means I'm going to go long a trade. I want to have the market telling me that it's at least neutral for the day. Okay, so that's how we get these results. Now, what does this SPY super system look at to come up with this? All right, and this is really pretty important. We do what's called triple screen assessments of momentum, and I've got this one highlighted because this is to me, this is the most important thing, and then trend. But momentum is very important. And triple screen assessment, if you don't know what that means, some people call it a fractal. It's multi-time frames. Okay, it's multi-time frames. All right, so this is how it does that. Now here is what the SPY super system looks like on the Thinkorswim. This is what if you get buy the software, this is what it's going to look like. It won't have these things telling what it is, but this is what it's going to look like. And this is all the things we use to tell us whether the institutions are in a trade or not. This right here is long-term trend. It's red, it's bearish. Red and yellow bearish, blue and green bullish. This is multi-time frame momentum. This is tells us what the momentum is. And momentum, it's important to understand what momentum is. just because you're getting green candles doesn't mean you have momentum in a stock. All right. Momentum means, is the close of this candle closer to the high of this candle than it was on the previous candle? In other words, when the close is getting closer and closer to the top or the very high of the candle, that is momentum. So this is telling us that we've got bearish momentum. The close on each candle is getting closer to the low of the candle all the way across here. And you can see how bearish this is. This was the Qs. All right, this was the Qs, I'm not sure what that on 131. Very bearish on the 5-minute chart. This is a 5-minute chart. But notice right here how it went to blue. So if you were in the Qs short right here, this is where you would get out. Now, what we've got on here is we've got the long-term trend, multi-time frame momentum, current time frame momentum, and this is actually the oscillator that drives the momentum. In other words, when this thing is flat like this down here near the bottom, it's going to be red. When it's near the top, it's going to be green. And when it's in the middle, it's either going to be blue or yellow, telling you that this is moving up. Now, what we use to trade, especially for intraday trades, the VWAP right here, the volume weighted average price. Remember, I mentioned that this is critical. This is what we use for us entry above or below. This is a support or resistance level we use. Now, once the price slips away from there, either up or down too far, we switch to the 15 EMA, this red line right here. It actually changes colors, but that is another support or resistance level, right? And we're going to show some trades here based on this, but I want you to see the VWAP and the 15 EMA. If you're using those, using that or that, and you're focusing on this current time frame momentum on a 5-minute chart, that's all you need to trade the SPY super system. That's it. Right, and this is a one template that you get with the SPY super system. This is another one you can get, and you can swap them back and forth. This is basically a template for doing the SPY super system trades for just day trades off of a 5-minute chart. Okay, so this template, you see what it shows you: the VWAP, the 15 EMA, right, and current time for momentum, because that's all we trade off of for these intraday trades. Just that one right there. So that's what this template is. You get it with the system when you buy the software, and you can switch them back and forth. Okay, the system also, SPY super system, puts in these little pink arrows. These are and blue arrows. These are pop out of the what's called pop symbols, that pop out of the box symbols, and they're pink for bullish break of compression and bearish for a bearish break of compression. So this gives us an indication of whether we're getting a nice move, which we did. I'll go right here. Let me just take a sip of water here for a minute. Any questions at all right now? Okay. Here we go. Now this is a SPY super system Heikin-Ashi reversal. These are the Heikin-Ashi candles. These candles here. Now remember, we were looking for flat tops. You see this compression right here? Look at the current time frame momentum right here. See, it's going green. This is bullish. Stock looks bearish. We're not going to go long. We're going to go short. See, it switches to yellow here. That means the institutions are buying. The institutions are selling. Selling is right here. You see that flat top on that candle? That's a Heikin-Ashi reversal candle. That would be the entry for this particular trade right here off the 15. Now, if you didn't catch it there, you could take it right here again, because we had a couple of doji candles and then another one right off the 15 to the downside. Okay, so that would be a Heikin-Ashi reversal candle getting you into a short trade on the Qs right there. SPY super system trade. Notice this thing goes to yellow and then goes to red. Institutions are selling the heck out of this thing. You can see that. Now, for the SPY super system, and I'm going to cover this before I cover the regular trades we take. These are the intraday trades that a lot of people like to take in the room. This is not for everybody, this particular strategy here, but it is one we use in the room, where we're just trading the SPY, the Qs, or the IWM, or the futures if you want to trade futures. And this basically is what our results have been using the SPY super system since we started in July. And the reason I did this was because, remember I said how big a problem overtrading is for a lot of retail traders? So I was looking for a way to be able to take more trades during the day if you wanted an intraday trade, but do it in a way that you're going to give you a high probability likelihood of being successful. So that's why I introduced this. I had been using it for a while. So anyway, in July, we had only did 16 and 0, 25.96. You're going to see a lot more trades with the SPY super system because these are very quick trades, right? So you can see what we made here. It was good money. Not very many losses, a couple losses here, but these are 6 losses, 3 losses. These are break even. But 56 and 6, 40 and 3 in September, producing nice results. You can see that. October, nice results here, 33 and 4. So this is the kind of results they have. Now, the important thing to understand about intraday trading is, again, you're going to have to be on top of this because you've got to take these trades yourself and you've got to be manage them in and out. But you're only going to have one trade on at a time, and they're going to be very short duration. So if you can't be in the room all day, so let's say you sign up for a subscription to the room, but you can only come in there maybe from 10 to 11 on one day or 2 to 3, you're still going to be able to get the trades that we take through your alert service, but you're also going to be able to take some of these SPY super system trades for the time that you're in the room. All right, so that's a big benefit as well. All right, and these are the November results: 54 and 5, produced 93.7. December 69 and 15, 10,450. Haven't had as many in January and February. I mean, up money, but not as much as that. I guess January was pretty good, about 10,000. I think February was down to about 3,300 or something, but they've dropped off a little bit because there just haven't been as many opportunities. Been too much chop in the market, or it's been too far away from the VWAP or too far away from the 15 during the day. You know, if you get a big gap down or gap up, you're way away from the support and resistance levels. So you've got to wait for the market to come back down or go back up to your support or resistance level before you can take a trade, because we want to be at support or resistance when we get in. And a lot of times what you end up doing is going up and then just chopping around, and you don't really get a good break to get you a break out of the compression to get you into a trade. So it means you'll have fewer trades. This was October. Now it's important to understand that the SPY super system results that we had 4,831, and in the room we had 7,448. This is not included in this. This is not included in this. These are completely separate profits and losses based on two different kind of methodologies. This is the SPY super system that you're basically managing yourself. These are the ones that we take in the room. These are the ones that I'm posting and sending alerts out on. Okay. There's November there, and you can see that 93.70, 73.93, and here's December. Right. December only had an 82 win rate here, but notice 69 and 15. But again, our losses are pretty small on these because we're getting in, again, very important, we're getting in right near the VWAP or right near the 15 EMA. So if it goes against us, our losses are going to be pretty small because we're going to get out before it goes too far, because we're getting in so close to support and resistance. All right, and this was the whole October, November, December. I just wanted to kind of put the accumulation of what we did SPY super system wise. Now the SPY super system trades, remember, these are the trades that I took because I don't post them, right? And I can't send them out on alerts. So these are the ones that I took. This is how I did with it. Your results are going to be different because you're going to manage them differently. You're probably going to end up taking more trades than I do because I can't do them all day long. I'm monitoring the room. I'm taking other trades. I'm answering questions. If you're just trading this, then you can probably do a lot more. And so October through December in the trading room, again, 44 and 7, 86% win rate, 17.7, 74. So that's pretty nice results here, I would say, for the last quarter of last year. All right, so I'm going to show you some SPY super system trades here on the chart so that you can see it. See if you can kind of get familiar with this. Again, I've shown you what we're looking for: the VWAP, the 15 EMA. Here's our support and resistance level here and here. Here is the current time frame momentum. This is the only thing we're looking for these intraday trades. Notice it's red here, bullish, bearish. Then we go to blue, which is bullish right here. And this is where we get into the trade. Right when it switched from red to blue, because we broke above the VWAP right there. That is an entry off of that candlestick for the SPY super system trade. We took this, this was in August, but this was a beautiful trade. We don't usually get this much profit. It's generally more in the neighborhood of about $80 to maybe $130, $140 a contract. 220 or anything over 200 is a little unusual because you usually don't get that long a run. You can get them occasionally, but not usually. All right, so this was in here, and we get out here, and again, you can see why we get out. Momentum waning. And you notice this went to yellow here, but we're out before it actually switches from green back to yellow. So 220 on that one. This was a $90 profit here on the SPY. This was, we were short the SPY here. We just took it for one candle, right? From here, we get in as it broke down with a pop out of the box symbol. We were red and yellow. We knew it was bearish. We get out right here. We just took profits because it was a very choppy day. We didn't want to hang around in it too long. These were Fibonacci candles, by the way. See the Fibonacci reversal candle? Flat top, wick and a tail, flat top, right? And then your wick and a tail, we're out. All right, but you can see it was bearish on the current time frame momentum. Everything was bearish here. Trend was bearish. Current time frame was bearish as well, but this is the one we're focusing on. Another SPY trade here. This is the exact same SPY trade as this one, except I'm showing you with regular candles. All right, and you see how we broke down here, and we get out. You see that tail here on regular candles? That tells me to get out. We've got bias coming back in, and you notice it was completely red and yellow. And so this is the modified layout. That's how we take the SPY super system trades off of there. All right, and again, this was a new template, just so I wanted to emphasize this. You can see here that this was a nice trade on the SPY as it comes above the 15 right there. But you see it's yellow, so I wait until it gets here. Then I get into the trade there, and then I would ride it up here and then get out. Okay, and again, you can see these is another one here. This was a $130 profit off the SPY. As we compressed, everything's green. We can see that this is a bullish trade, but we're looking to get in at the best entry we can. So we're trying to get in really close to the 15, which is right here. The VWAP was way down here. So we followed this one up, and we just rode it. As long as it stayed above the 15, we stayed in the trade, and we get out right here as it starts to wane. All right, so $130 profit a contract. IWM, again, jumped in here as it went to blue, from yellow to blue. Then it just kind of moved sideways. We probably down money on this trade as it moved sideways, but it stayed above the 15. Our stop does not get hit. It didn't close above the 15 on any 5-minute candles. Out of here at $90 profit. Just kind of give you a different flavor on the kind of trades that you're going to get. And you're going to get some losing trades, by the way, of course. Here's the IWM right here. You can see it was red. We knew it was bearish. We're looking for a good entry. Here's a pop out of the box off of the VWAP right there. And I can't see these all day long because I'm watching other stocks. But if you're trading the SPY super system, you could just be looking at these yourself, basically just focused on these and trade these. Coming off the VWAP right there, nice entry right there, nice entry. And it comes down, you see it just kind of slowly chops around. Everything's red, current time for momentum stays red. And then we get out right down here as it starts to bounce back up again. Notice that it's starting to show some basically momentum loss. It's basically compressing on the price action. Price action does matter. Another SPY super system trade here. This was a beauty, 280, probably one of the biggest ones I've had. I get in here and off of the VWAP as it broke down to yellow and red. And it didn't really do anything. This was when you really had to be patient because it stayed below the 15, and I had to continue to stay in it as it closed below the 15, just barely right there, but it closed below the 15. And then it went through this white line, which is a pivot point that I use. This is on the software as well. And then it pulled down nicely right here, flush down, get out for 280 profit. All right, so I'm not going to go over too many more of those. I think you can see what I'm talking about here. There's a SPY super system trade right there, $150 of profit off of the IWM. Compression was blue, so it's bullish. We take it here as it breaks above the 15, pop out of the box, we grab it, and we stay in it as long as it stays above the 15. All right, so that's what they look like. I'm just throwing some regular charts, so see if you can identify it yourself. This was obviously, you can see this is red here, but you're just compressing. You could have taken a trade here as it broke down, but you would have got stopped out pretty quickly as it went back above the 15. But this is actually the ideal situation on this one, is as it breaks above the VWAP. See, it got above the 15, above the VWAP right here, and it goes to blue, bullish. This was the perfect entry for a long right there. It's hard sometimes to trade these big red candles because by the time you see them, you're getting in kind of far away from the 15. Okay, there's another one you can see. See what you can see here. It's all mostly green. You can see how it's compressing here. Where would you get in? Right here. This is probably the best spot to get in right there. Could have get in here, but anywhere along here is fine. and there's a SPY. This was when I traded to the downside here. Right here, as it broke below the VWAP, everything's red. Come down here, I get a green candle, I'm out. I get back in again, and then I look for a break above the 15 and the VWAP right there. Get back in again here as it goes to buying. Get in here and ride that thing up. Okay, so I traded it to the short side and to the long side. All right, there's some more on the SPY. I won't go through too many more of these. All right, so now I want to show you some charts of regular trades that we've taken. These are the swing type trades that sometimes they last more than, sometimes they're only going to be closed out during the day, but most of the time they're going to go overnight. So that helps with anybody who's under PDT rules as far as being a pattern day trader, where you have to have $25,000 to close more than 3 round trip trades a week. Okay, here's some of the charts. The recent action, here's Nike. This was the one we just took, I told you. All right, so we get into Nike. If you see how red this thing is across all time frames. Now, when you're using swing trades, you got to use the multi-time frame momentum and the current time frame momentum. Both of these become critical levels to be used, or critical indicators to be used. But you see how red it is here. But the stock is just moving sideways. All right, so we actually get into this, I believe it was on 328. Yeah, right here, as it broke down. 328 is where we get into Nike, I believe. And it kind of compressed, but we stayed in it because it was very bearish setup on the daily chart. All right, this, you see the daily chart telling us that this is a short, and then we got this big flush down right here. So this is where we were here, we get out here. This is how we get out for $9. This big drop down. That was Nike. This was Sarepta. This was, again, this is the daily chart in Sarepta. And I think Sarepta, we get in on the first. Yeah, right here. We get into Sarepta, broke down here. Bearish. Everything's red. You can see how red they are. This VWAP, by the way, is not meaningful on the daily chart. You don't use the VWAP on the daily chart. What I'm using here was just a compression break to the downside. We took it here on 4-1, and we get out right here on this move right down here. Pulled down a little bit more, but we did good on that one. As you remember, we made 77% on that trade right there. Right, this was HIMS. This was a long stock trade we've had fairly recently. We took 25% profit after leaving and running on. Actually, I left the runner on. Basically, I marked it in the room as 25% profit, but I left the runner on, and that runner I jumped up 269% because it made a big, huge run. We get in here, and I think we get out right here. We had a decent profit in it, and then it shot up. But I marked it as 25%. But that was a big, big move. You see how the current time frame, multi-time frame, were all green. The trend is all green. The institutions are buying the heck out of this thing. All right, the colors tell you exactly what they're doing. Okay. Palantir, we get into Palantir here. It was a nice trade again. Flat compression, goes yellow, goes green. We get in right here, and we're out 31% profit in 2 days. You see that we're being guided by the colors here. All right, Twilio 58% profit in 2 days. Lulu, big gap down on earnings. We let it compress. We take it here as it goes from blue in the multi-time frame momentum. This is multi-time. This is current time frame. This is the daily. This is the 1, 3, and 9 day. You can see that it goes back to yellow. We take it right here, and we get out overnight. We just take it for one overnight, and we're out for 56% profit overnight on Lulu. This is Amazon. This was an intraday trade we took. Again, this is a 5-minute chart, so we're interested in this current time frame momentum. It comes along for the 15. It pops out of the box right here. In other words, we get a compression break, moves up, and moves up nicely. And we took 32% profit in 45 minutes. This is a 5-minute chart. You can see this nice move. All right. And ENPH, a beautiful 20% in 1 hour, 5-minute chart. Again, compression, see the compressing? Everything's red. We know we're going to go short this if we're going to go anywhere. We're going to take it short. We take it short here as it breaks down below the 15 with a pop out of the box symbol. We ride it down for an hour and take 20%. Verizon, big 50% profit in an hour here. Same thing. Everything's being sold. It's riding above the VWAP. We grab it here and we take it for an hour and we're up 50% in 1 hour. In Verizon, the premiums are very low in Verizon, so you can get tight bid-ask spreads. If you get Verizon to make any kind of a move, 40, 50, 60 cents, you can make a lot of money on Verizon. All right, and this was Tesla. This was when we took overnight. as the 5-minute chart showed us, a pop out of the box symbol. Everything was red and yellow. The institutions were selling it. We took a chance and took it overnight, and we got a nice drop from 120 to 112. I didn't even put the profit on there. It was huge, a huge profit on Tesla. All right, so again, that covers the webinar. That covers our strategies, the SPY super system strategy, the high probability trade setups for all the trades we take in the room, and on the alert service. And again, it's important. I think that one of the most important thing is to remember that I said the market is getting clobbered right now, and we only had 4 trades this week, and we made good money on all of them. And that's the whole point of using this, is to know which way the market is where it's going, where the institutions think the market's going, and we trade in that direction. So we're very conservative as far as allowing ourselves to only be in a small number of trades that have very high probability, and we're willing to take 25, 30, 40% gains as opposed to trying to grab 304%, 300 to 400% gains and stacking those on, just taking those small gains and just taking small gain after small gain after small gain. It adds up. It adds up dramatically. You know, with the market down 10% in 2 days, and us with those big wins, that kind of puts into perspective exactly what we're attempting to do here and what we're able to do as far as helping you trading. All right, so again, here's the strategies we use. Covered that. All right, so this is what the offers are for this week. You can get a 2-week free trial. So that's going to give you, you're going to be in the trading room. You're going to get the text alerts. You're going to get to look at all of the videos I have, about 30 of them out there now. And it's all free for 2 weeks. If you like it, you go to the quarterly subscription, $3.96 a quarter. You can cancel anytime. You know, you can cancel anytime you're in the trial. You don't like it, you get out. No fuss, no muss. But if you stay in it, then it's going to go to the quarterly. The only thing I don't like about this, and it's a great deal, really. I mean, obviously free for 2 weeks. You're only getting 2 weeks worth of activity, so market changes a lot. So if you're in it for this week, yeah, you'd have probably been pretty happy with what we did. But you know, so it just depends on what the market conditions are. But if you want to get the trading room and the alert service at a better price, then you would go with the annual, which is $11.96 a year. Obviously a lot cheaper than $3.96 a quarter. And you would then also get into the Discord chat community. We've got 2 other professional traders in the Discord chat room where they discuss trades, talk about the sectors, talk about economic information, and they also can converse. They can talk to you. You can talk to them live in the Discord room. That's the annual access for $11.96. One-time payment. If you want to get the trading room and the alert service forever, you never have to re-up again. It's $24.96 for a one-time payment. All right. These are pretty good prices, by the way. Both the alert service and the alert service and the room for $11.96 is, well, you saw what the profitability was. And now the SPY super system, which is a piece of software, that's the software that actually creates these charts. All right, this is what the SPY super system software does for you. All right, it creates those charts, all those indicators. That is $14.98 a year. All right, and now that gives you the compass trading system and the scanners and all the other things, which becomes known as the SPY super system. It's 50% off. They'll be installed for you on your thinkorswim platform, which you don't have to buy. If you don't have thinkorswim, you can put it on there. Again, you don't have to trade on thinkorswim. I trade on Tradier. I don't trade on thinkorswim, but that's where the software goes. But they'll install it on there. You don't have to do anything. No concern about technicals or technical analysis or technical setups as far as your computer is concerned. They'll put it on there. Charles, Sergio, they've got some excellent support staff at Rightline. And then again, if you do that, you buy the software, you get a month in the live trading room for free, as well as the alert service a month for free. And one-time payment on this SPY super system, the software. If you like the software, for $19.98, that's just $500 more for lifetime on this thing. And again, that's going to give you the trading system, the scanners, and all the stuff we just talked about here. Plus, you're going to get access to all the videos that I did, all the training videos, which I keep adding to, by the way. I just did one recently on the 11 most common mistakes that retail traders make. I put that out on Reddit, and I think it's very useful to identify help you identify some of the problems that you may have in your trading, what's causing you to not be profitable. All right, so that's that is the software, and right there, that's the software. That's what creates the indicators on the Thinkorswim platform. In other words, that software creates this, which you can use yourself. Obviously, you don't have to be in the room to use it because you'll have it yourself. And then you've got the text alert service in the trading room. Okay, and there should be actually a link in the chat they got Rory's got links out there for both of those things, the trading room and the alert service, as well as the software. All right. Okay, so I don't see any more questions, I don't think. Josh, I appreciate that. Thanks very much. Thanks for everybody coming here and spending a Saturday with me. I appreciate that. I know you don't have to. I suspect most people that come and listen to a webinar on a Saturday probably are looking for ways to improve their trading. I hope we pointed out some between Hikinashi candles and the software that we have here, as well as the trading room and the alert service. I think those would be excellent ways for you to perhaps turn your trading around and become consistently profitable. That's what you're looking to become, is consistently profitable. That's what makes a difference. Whether you want to be a full-time trader or just a part-time trader and want to enhance your disposable income every month. All right, everybody. Thanks so much for being here today. I appreciate it, and look forward to seeing some folks in the room next week. Have a good weekend.